Imagine losing everything your family built over generations in just 4 days. Not from war, not from natural disaster, but from numbers changing on a board. This actually happened to millions of Americans in October 1929, when Wall Street didn't just crash, it obliterated entire family fortunes that had taken decades to build. The Roaring Twenties seemed unstoppable. Stock prices had tripled in 8 years. Ordinary people became millionaires overnight by buying stocks with borrowed money. Families who had never owned anything beyond their homes suddenly owned pieces of major corporations. The Livermore family fortune grew to $100 million. The Kennedy family amassed wealth that would last generations. Everyone believed the party would never end. But here's what most people didn't understand. They weren't actually buying stocks with their own money. They were using something called buying on margin, which meant borrowing up to 90% of a stock's price from brokers. If you wanted to buy $1,000 worth of stock, you only needed $100 of your own money. The broker would lend you the rest. This seemed brilliant when stocks only went up, but it created a ticking time bomb. By September 1929, ordinary Americans had borrowed $8.5 billion to buy stocks. That's equivalent to about $127 billion today. Taxi drivers gave stock tips. Shoeshine boys discussed market trends. Even maids invested their life savings. The stock market had become America's casino, and everyone was betting with borrowed money. Then came Black Thursday, October 24th, 1929. Stock prices began falling, and something terrifying happened. When you buy stocks on margin and prices drop, brokers demand immediate cash to cover the losses. And this is called a margin call. Suddenly, millions of Americans received phone calls demanding money they didn't have. Panic selling began. People desperately tried to sell their stocks to raise cash for margin calls, but everyone was selling simultaneously. Stock prices collapsed faster than anyone thought possible. The Dow Jones Industrial Average, which had reached 381 points in September, plummeted to 230 points in just one day. Billions of dollars in wealth simply vanished. But Thursday was just the beginning. Black Tuesday, October 29th, was even worse. Trading volume reached 16 million shares, a record that wouldn't be broken for decades. The stock market lost 12% of its value in a single day. By the end of the week, the market had lost $30 billion in value. That's roughly $400 billion in today's money, gone in 4 days. The human cost was devastating. The Livermore family, worth $100 million in September, was completely bankrupt by November. Jesse Livermore, once called the greatest stock trader in history, lost everything and eventually took his own life. The Kennedy family, however, survived because Joseph Kennedy had sold most of his stocks before the crash, sensing danger. Ordinary families suffered even more. The Smiths of Chicago had built a small fortune through their hardware store and stock investments over 30 years. In 4 days, they lost their store, their home, and their children's college funds. The Williams family in Detroit saw 3 generations of savings disappear when their bank failed, taking their deposits with it. Banks across America collapsed like dominoes. Between 1929 and 1933, over 9,000 banks failed. When banks failed, depositors lost everything because deposit insurance didn't exist yet. Families who had never touched the stock market lost their life savings simply because their banks had invested in stocks. The wealth destruction was unprecedented. By 1932, stock prices had fallen 89% from their 1929 peak. The total market value of all stocks dropped from $87 billion to just $15 billion. Unemployment reached 25%. 1 in 4 American workers had no job and no income. Generational wealth that families had spent 50 years building vanished in months. The Astors lost millions. The Vanderbilts saw their fortunes shrink dramatically. Even John D. Rockefeller, the richest man in America, lost hundreds of millions of dollars, though his vast wealth allowed him to survive. The Great Depression lasted 10 years and fundamentally changed how Americans viewed money, investing, and financial security. An entire generation became extremely conservative with money, preferring savings accounts to stocks. They had witnessed firsthand how quickly Wall Street could erase everything their families had worked to build. This catastrophe led to major financial reforms, including the creation of the Securities and Exchange Commission and federal deposit insurance. But for millions of families, these changes came too late. Their generational wealth was gone forever, erased by 4 days of panic on Wall Street.